we have been having consistent webinars on every Saturday. Last Saturday, we went across the Indian boundaries into Africa to explore business. We have been touching different aspects and different avenues and different parameters of business across various operations, across various sectors. And today, we decided to focus on a very, very crucial component of any business, that is tax planning. And obviously, we are going to talk about tax planning for companies this time. And while we are focusing on tax planning, since it's a very, very wide subject, we have chosen to keep it around direct taxations. And to give us inputs and share their experiences with us, we have a competent panel with me today. I have today Mr. Prem Shankar and Mr. Rajiv Bhargav. Mr. Prem Shankar has a rich experience of more than 20 years with various businesses and corporate entities on advising, consulting, and working on the taxation as a core subject, along with other practices which he has. Similarly, Mr. Rajiv Bhargav also comes with more than 22 years plus of experiences and has been intricately working on taxation with various corporates. Along with, he is also an valuation expert, and we have been engaging and deliberating on various avenues together. Welcome, Mr. Prem. Welcome, Rajiv.
Thank you very much.
And again, as I say, last but not the least, let me once again introduce Mr. Ravinder Goel to all of you. Some of you already know him. Mr. Goel is an able and has been an entrepreneur for the last 25 years. He has been training and educating a wide segment and a huge amount of masses across the country. This time, he is focusing on his tech ventures, and along with him, we are also targeting upcoming economies beyond India into developing economies in terms of taking avenues to their shores. Welcome, Mr. Goel, once again to the forum.
Thank you.
I'm sure with your experiences as an entrepreneur, you will be able to add a lot of values. So I would like you to speak a few words at the beginning. Mr. Goel, please.
Thank you, Sandeep. And hello, entrepreneurs. I welcome you all in our 15th webinar on behalf of Panacea eBiz Consulting Group Forum, Resolve the Unsolved. As we have been focusing various issues which are there with the entrepreneurs, and probably we just give them a small more learning or some experience we share from our consultants on panel, and it becomes a helping hand for everybody around. Our today's topic is tax planning for companies. Now, there are three words which I could see as a businessman. One is tax planning, then tax management, and then third comes is tax avoidance. So there is a whole set of committee which works on tax avoidance. Then there are people who works on tax management, and third is a category which is not very large, which works on tax planning. Now, when we talk about tax planning, it is more about taking due advantage of the legal provisions within the legal ambit. We work out and save our money, and we save the taxes which are due to us. Now, everybody in business, they work for definitely for profits, and if by somehow, if they can manage to save taxes within the limits provided in the laws, or maybe by the current government regimes, or the benefits which have been extended during various budgets. So probably an entrepreneur is not up to the mark where he can study the nitty-gritties of such kind of inputs. So we have like everybody have the array of professionals, CAs or maybe lawyers or other consultants with them. But still, yes, when you have people talking on general forum like this, so you may get some more inputs. So today we have Mr. Prem Shankar, a friend of us and consultant, thorough professional on an established CA and tax consultant, and Mr. Rajiv Bhargav, our panelist before as well, who's a CA, CS, and a law graduate as well. So I welcome both of you and request participants to put down their queries on the chat box so that once the basic session is over, we can take up those points. And thank you for listening to me, and back to Sandeep to take this further now.
Thank you, Mr. Goel. In fact, you pointed it out aptly. There are three categories which are there, and we have faced this scenario while consulting and advising companies all across. And taxation has been always a very, very important and exciting topic for everybody. To start off with, taking on from what Mr. Goel shared, I request first Mr. Prem Shankar, if you can share with us uh, the top line overview in terms of what should one understand from the basic concept of tax planning.
Okay. Thank you, Mr. Sindhu. Thank you very much. Okay, this corporate tax planning is generally thought of as being a tax saving tool, but we as professionals see it from another viewpoint. We take it as it has multi dimensions. This is a process. This tax planning is a process which helps you to administer your taxation in a manner that you operate your business in a more efficient, more profitable, and more compliant manner. So the tax planning stands for these three things. It makes you efficient, profitable, and compliant. So for me, tax planning is this one.
Great.
Over to Sandeep.
Now, carrying on with this initial introduction, Rajiv, would you like to add something at this stage before we open it up for you?
Yes, sir. In fact, Ravinder ji have touched upon a very important point that most of the time people see tax planning just for the saving on taxes. But that saving could be legitimate, that saving could be illegitimate, or tax avoidance or evasion. So when somebody gets into the practice of tax evasion, they not only do the harm to the economy, they also doing a harm to themselves, because ultimately it might be very costly to them in future. And as the systems are improving with the government, tax evasion has become very difficult and very costly as well. That is a very important point that he has highlighted. So there is a more need for a legitimate tax planning of operations, with which the company can always fulfill their objectives of being more competitive, more profitable, and have better cash flows by having minimizing their taxes, but in the legitimate way. That is a difficult way, but that is the way forward the companies should be focusing on.
Wonderful. So we have the starting base already there. Now I am opening it up to both Mr. Prem and Rajiv to take on. So Prem, you can initiate, and as we have structured it out, you can take on right now with your
Sure.
suggestions and ideas you want to share.
Yeah, so I'm taking it from where Mr. Rajiv just left, saying that all tax planning should be done in a legitimate manner. First, we have to understand why this is so. We have to realize that whatever we do in a business, amongst all our shareholders, government is implied shareholder in our business. Government is already a shareholder to the extent of 25% to 30% of our net profit. So, like when we do any business, we try to do justice amongst the partners. So, likewise, we have to take the government as a legitimate partner in our business. So, we have to plan our taxation and the profit in a way that whatever is due to the government in the form of taxes goes to the government. This is the first foundation point where, based on which, around which we'll talk about the tax planning today. So now we have to go to the objectives of tax planning. This is what we have to discuss now. So first and foremost, we have to plan our taxes or our business in a manner that we are able to minimize the litigation. So to minimize the litigation, what one will have to do, the entrepreneur needs to operate his business in an informed environment. It is expected that the entrepreneur is aware of all the taxation laws, not by himself, but through the resources he has around his business, that whatever is required to be disclosed to the IT authorities are properly disclosed. This is very essential for a business to run peacefully, that whenever you are required to do something for the government in the form of disclosure or in the form of payment or filing some reports, you do that properly and in time. So this proper tax planning helps you to minimize your litigation. This is the first objective. Second one, which everybody knows, that we have to minimize our taxes through our tax planning. So how one can minimize the tax liability? For this, again, you have to be aware, and your system has to make you aware what all benefits and the schemes are available legitimately. And while you are operating your business, you structure your business in a way that you are able to get the benefit of all those kind of schemes. We will, in the second slot today itself, after this objective, we'll be talking of the existing schemes which have been recently introduced by the government, which are already there in the law. So, which generally people are not aware. We have to focus on the things that one, if he is running a business, he should be aware of what kind of benefits are available in the law. Right. And third one is that if you know your tax liabilities, you will have to plan your budgets, your funds, in a way that whatever tax is required to be paid to the government, there is prescribed structure that if you want to pay TDS, you have to pay in the next month. You have to pay advance taxes, it has to be paid quarterly. Your self-assessment tax, it has to be paid before you file your income tax returns. So there are structured dates which you have to follow. So once you know those dates, your obligations, you have to plan your fund in a way that whenever those obligations become due, you pay those well in time. By paying those taxes in time, you avoid your penal interest, your penalty. So again, you are saving some cost here. So the third objective is that you plan your fund to pay the taxes well in time. The fourth one is you have to realize that you are contributory to the development of the economics of the country. So government runs on the taxes you pay. So whatever legitimately becomes due in the form of taxes, you have to pay that. You never think of making some adjustment, some illegitimate actions whereby you can avoid the taxes. Because as Mr. Rajiv rightly said, today when you avoid tax, try to avoid tax, it becomes very costly at later point of time. So you have to be very legitimately paying all the due taxes. There are other objectives which Mr. Rajiv is going to take on henceforth.
Right. Before I think you start off, it's great that Prem, you shared very critical thoughts. Like you focused upon avoiding and minimizing litigations. That is important. Minimizing the tax liabilities was one. Third, you came on to budgeting so that you know what you have to pay out as taxes. And the fourth most important was you mentioned about economy, your contribution to the economy as such.
Yes.
And I think these are very, very overriding factors which any entrepreneur needs to understand and appreciate, which builds on the valuation of the company itself. Now, going further, Rajiv, please, up to you.
Yes, sir. So obviously, if a business is tax compliant, that minimizes the risk of to the business also. There is a less risk to the business because the non-compliances are very costly these days. At the time, as Prem pointed out, that the tax planning is not only minimizing the taxes, one should focus on minimizing the interest, penalties, late fees, etc. So many of times we have noticed that the business could have saved a lot of money if they would have filed their returns on time. Nowadays, if somebody files TDS returns late, there is a late fees that they pay and prosecution and all those things happen. So that is an important element. Of course, if one can do the legitimate planning, one can be better informed for the tax perspective. Then obviously that minimizes the risk for the business, that increases the cash flows for the business, and ultimately the business becomes more competitive, and overall the business commands a better valuation as well. So ultimately, it benefits the stakeholders by way of a better maximization of value of the business as well. So all those objectives keeping in mind, of course, we all understand that it is an important topic. Uh, Gradually, the government has got an intention that tax legislation to be simplified, and they understood that a lot of complexities in the legislation is because of so many provisions for tax exemption. So gradually they try to minimize the exemptions and also reduce the tax rates. But still, there are some exemptions available, which we have realized that many a times the entrepreneurs, businesses are not aware of those benefits that the government is giving, and they lose an opportunity to save the taxes legally. So between me and Prem, today we have listed out a few provisions which are less known to entrepreneurs, and they might be losing the tax benefit out of those beneficial provisions. So next we are going to discuss some of those provisions which are important for the businesses from tax planning perspective.
Yeah, so
Yes,
I would
Sunil.
like to take some of those things, some of those sections which are available to the entrepreneurs, and also the terms and conditions where based on which you can avail those benefits. So, like everybody has been aware of this term startup. So, government has offered some tax benefit to the startups, and there are some prescribed mechanism whereby you can avail some tax benefits. So first, I'll apprise of the tax benefits which you get by being recognized as a startup. It is actually 100% tax exemption for consecutive 3 years out of first 7 years of the incorporation of the company. So, but for being that startup, you have to first get yourself registered and recognized as a startup by Department of Industrial Policy and Promotion, which comes under Ministry of Commerce and Industries, Government of India. And your business has to be around innovation development and improvement of production processes with a high potential of employment generation and wealth creation. So this should be the eligible business. And who are the SSEs or the person who can get this benefit? So this is again a listing that only limited companies, whether it is public limited or private limited company, or and a limited liability partnership. Only these two categories of SSEs are qualified for being recognized as a startup. And when you get yourself registered and recognized as a startup, you are eligible to get a tax deduction, 100% tax deduction benefit for 3 years, consecutive 3 years. So, but there are certain conditions which we have to be aware of and we have to follow. First and foremost is, I told that the structure has to be limited company or limited partnership. The second one is, the incorporation of the startup has to be between 1st April 2016 to 31st March 2021. And the turnover of the startup should not be more than 25 crores. So this is the situation whereby at your choice, at entrepreneur's choice, out of first 7 years, entrepreneur may choose any 3 consecutive years where he can get 100% tax benefit. So this is one thing. The second one which we are talking right now is a section which gives you additional benefit on depreciation. There is a section called section 32, subsection 1, clause 2a. So it says that if you are engaged into manufacturing of any article or thing, then you are eligible to get additional 20% depreciation of the actual cost of plant and machinery. Those plant and machinery should be such which are used in the manufacturing plant, not at an office administrative and all. And another condition is that you have to purchase new plant and machinery. Used plant and machinery, if utilized in the business, cannot be taken as the plant and machinery qualifying for this section. So these two things I had to talk today. One is startup exemption and second one is additional depreciation. Now there are other benefits which we entrepreneur can get in the form of reduced rate of income tax, which Mr. Rajiv is going to talk about.
Thank you, Prem, for explaining some of the very important benefits. And in fact, I also get a lot of queries on this startup benefit because startups are there, a lot of startups are there, and they are keen to understand how they can get the benefit of this startup exemption. And 3-year income tax exemption is really a great thing. And statistically, very few companies have opted for this benefit. Maybe most of it gets contributed to the ignorance of these provisions. I am also going to discuss about some of the tax exemptions which are very less used by the entrepreneurs out of ignorance only. And those are very good benefits. Why they are benefits is that your taxable income, gross total income remains the same, whereas your business income remains the same, but claim it as an exemption and you pay less taxes. So it's kind of an incentive and a benefit that is given by the government. One of the such very less used provision is section 80 JJAA. What it says is that in India the employment generation is very important, and the government wants organizations, entrepreneurs to generate employment. So every business, when they are generating employment, the government wants to incentivize them. And any business which is a new business, obviously generating some employment, or even an existing business, if it is a growing business, is generating employment. And for generating those employments, they are eligible for this additional deduction from their income. So that is a straightaway benefit to them. So in case it is a new business, if a new business is established today and we give employment to, let's say, 10, 15, 20 people, so I'm eligible for the deduction of the salary paid to these 15, 20 people. But if I am a existing business, then there has to be some new employment. So if there is an existing business, then if let's say on 1st April of a particular financial year, there were 30 employees in that business. And as on the 31st March, the next year, means after 1 year, the number of employees is increased by 10 or 5. Then you are eligible for the exemption only for the additional employees that you have created during that period. So the government is giving that incentive for generation of employment. So that's the one very important thing, and it should be relevant for any business which is growing or any business which is a new business which is established recently. And they should claim this benefit because there is no separate registration required. There is no, not much of a formalities involved. It is just a simple report which a CA has to file for that business at the time of filing of their income tax return. And how they give the deduction? They give the deduction is of the total salary of those additional employees. They give it in 3 installments. So 30% each for the next 3 years. So if my additional salary to those employees is, let's say, 10 lakh rupees this year, so I will get a deduction of 3 lakh rupees each for a period of 3 years. So just by paying 10 lakh rupees additional salary, I am reducing my tax liability by means I'm reducing my taxable income by 3 lakh rupees for the next 3 years. And my tax liability, if I'm in a 25% tax bracket, so that 76,000 rupees tax, I'm straight away saving. And companies have employed more, they can save a lot of amount from that perspective. And if they keep on hiring people again next year, next to next year, so for every next year hiring, again that 30% tax benefit is there. So it becomes a very huge benefit for organizations. But there are some conditions. That conditions is that you have to pay the salary through banking channel. So you cannot avoid the provisions by just showing a dummy employees and paying, showing the salaries. So the salary should be paid through the banking channel. That is one condition. Second is that government wants to generate the employment at the low level. The government feels that the people who are at the higher level, they are somehow employable. But the people who are at a low salary level, if the company is giving them employment, that is more important because those are the people who are going to remain unemployed. So only those employees which are getting salary of up to 25,000 will be considered for this scheme. So it is more beneficial to companies which hire people at the lower salary bracket because higher salary bracket people are not considered. Another important condition is that you have to mandatorily apply the PF for those employees. But Provident Fund is a good scheme, and the employees get it's basically for their future security. So that is something which companies can manage. Plus, it is a mandatory thing for employees below a certain threshold. So most of the times for those employees, the company is already getting covered under the Provident Fund category. So those are few conditions that a business has to follow. Very basic conditions are there. Once the business satisfies these conditions, they are eligible for this big benefit. And I personally have experienced that many of the clients which have come to us, they were not aware about this benefit. Many of the companies were not claiming this benefit while they were eligible. So the companies which have established 2 or 3 new plants in the last year, they were not aware and they did not claim. So that is a very good benefit which the government is incentivizing the people who are generating employment. So that one should always claim. So that is what I wanted to highlight. 80JJAA is the section which people should look into. All the entrepreneurs should look into. Uh, Another important point that I want to discuss today is that a few years back there was only tax planning in respect of the exemptions availability, but now the situation has changed. Now there is a tax planning in choosing the right tax regime as well. So that's an interesting situation, that you have multiple options to choose from. So there is one option where you pay less tax at the lesser rate, but you will not be eligible for some exemption. And there could be another option where you pay a higher tax, but you will be eligible for exemptions. So why this situation has been created is because the government wanted to create a tax environment which is simple, no exemption and lower tax rate, so that the whole world will know that India is not a high tax country, and the tax exemptions are minimized. So there is a simple tax law that you just calculate your income, you pay tax at a lower tax rate. But lot of businesses were enjoying the tax exemptions, and lot of businesses want to enjoy the tax exemptions. So for them, discontinuing all those exemptions was also impracticable for the government. So because of this, we are having a situation today that we have an option to have a higher tax rate with exemptions, or we have an option to choose a lower tax rate without exemptions. So, like my fellow friend Prem just informed about the benefit of additional depreciation and this startup 3 years tax benefit for a startup. So, if you want to claim those benefits, you have to sacrifice on the lower tax rate. You have to choose the higher tax rate. So, but with higher tax rate and exemption, still you might be benefiting. So if you are a startup organization, your income is completely getting exempt for 3 years, even without claiming, means since it is exempted, even then you are going to get benefited. If you are having a lot of capex, lot of plant and machinery investment, you might be interested in claiming this additional 20% appreciation with a higher rate. So one point I wanted to discuss is that the tax planning by choosing the right option. Many a times the entrepreneur doesn't discuss with the professional, and the professional choose an option based on the return that he see in front of him. But here there is a big problem, is that once an option is chosen, you cannot withdraw from next year. So suppose I am a professional and the entrepreneur comes to me, showing me a balance sheet that you just filed my income tax return, and I don't ask him what is your plan for the next year, what is your future plan, and I'm just looking at his balance sheet today and I'm choosing a particular option. Maybe next year he will have a huge tax liability because I have chosen the option which was good for 1 year but not for the future years. So the government introduced all these things to bring simplicity in the law, but unfortunately it has become a little more complex, because as and when you have multiple options to choose from, you need experts to decide which option you should choose from a long term perspective. So maybe that this year you are minimizing your tax, but next year you have a bigger problem in your hands. So there are different tax provisions available to the companies. It comes with certain conditions, it comes with certain restrictions, and the rates are different. So for example, there is a rate of 30%, there is a rate of 26%, 25 is the rate, but with education tax it becomes 26%. There is a rate of 25.17%. In case of 25.17%, it is 22% is the rate, but with surcharge and education tax, it becomes 25.17%. So you have a rate of 25.17%, you have a rate of 26%, you have a rate of 30%. So which one is to be applicable on your company, whether you should choose the lower rate or whether you should choose the higher rate? So those are critical questions for the businesses. So those provisions are actually contained in section 115, 115 BA, BAA, and BAB. 115 is a favorite section for the regulators. They have introduced a lot of provisions under this section. So if a company is a manufacturing company, they can choose a rate of 25%, even with respect of their turnover, or they can choose a rate of 25.17%. If they choose the 25%, it actually becomes 26%. The 22% rate is actually 25.17%. So I'm saving 0.83% tax if I choose the rate of 25.17%, which is given in section 115B AA, which is the most popular rate people are choosing these days, because most of the companies are not eligible for any special tax exemptions. So if you choose that rate, you are actually paying taxes at a much lower rate, but you cannot be eligible for any tax exemption. So you take 25.17% rate, but you cannot claim startup exemption. You cannot claim any exemption under Chapter 6A. You cannot claim additional depreciation. But in that case, also you can claim APJJAA, which I just mentioned. So the incentive which the government is giving you for generation of employment, that is available in all situations, even if you go with the lower tax rate. So most of the times this 25.17% tax rate is beneficial to the companies, but there could be numerous situations where this might not be the beneficial one. A higher rate might be the beneficial one, because if like I have a client which has an accumulated MAT credit of a huge amount, because their industry was eligible for a tax exemption for 5 years under Section 80 IB. So they have a huge MAT credit. If they claim this lower tax rate, that MAT credit will go off. So their balance sheet, all the MAT credit they have accumulated over the years, that will go away. So for them, it is not beneficial to choose this lower tax rate. But in most of the cases, this lower tax rate is very beneficial to the companies. So this is one point, was Section 80JAA that I highlighted. A very important provision. All the companies should try to take benefit out of this section, and it is available even if you choose a lower tax rate. Another important point I want to highlight is that choose the right tax regime carefully. Lower tax rate with no exemption, or higher tax rate with all the exemption. Last important point I want to highlight is that a very good benefit the government has given for any new company for manufacturing business. One of the very low rate of tax, which is means nobody could have imagined that the Indian government will offer such a low income tax rate for a company. They have offered a tax rate of 15% only. So for any new manufacturing or company, the government has offered a very, very low rate of 15% tax rate, which any company which wants to establish a new manufacturing facility should be using this beneficial tax provision, because 15% is a very, very low rate of tax for a company. So, but there are some conditions, of course. No exemption comes without conditions. So if you want to get advantage of this rate, this 15% tax rate, you have to satisfy some of the conditions. So one condition is that it has to be a new company. So if you are doing the manufacturing, but you are an old company, you cannot take benefit of this section. The government wants a new company to be created for manufacturing to give this benefit. So this provision was introduced in 2019. So any company which was registered after 1st October 2019 will be only eligible for this concessional rate of 15%. So that is one condition, that the company should be the new company. Second is that you have a timeline by which you have to complete your commencement of manufacturing. So by 31st March 2023, the manufacturing should get commenced, because the government wants the manufacturing established soon. So 23 is the timeline by which the manufacturing should get commenced. It may get extended in future, but this is the timeline today. the business should not be formed by splitting of a reconstruction of an existing business. So a lot of businesses owners will think that, okay, if that is a low rate, what I will do, I just make a new company. I will sell all my machinery of my old factory to this new company, and this new company will enjoy that 15% tax rate. So that is not the case. They are not allowing. It has to be a new manufacturing setup and a new factory and a new business. Another condition is that it should be manufacturing. This exemption is not allowed to any other businesses. It is for manufacturing and production only. You have to do the manufacturing and production only, then only you are eligible for this benefit. They have excluded some businesses like software, they have excluded printing of books, they have excluded. So some businesses they have excluded, but most of the manufacturing are covered in this benefit. Another condition is that you should not be using old machinery. So what company might be doing is that they will buy an existing business from an outsider, not your own business. You will buy the machinery from an outsider and then you will set up a new business. So they are not allowing it. But if you are importing an old machinery, sometimes it happens that for competitive reasons, the businesses import an old machinery which is obsolete outside India, but that machinery can be used efficiently in India. So that is allowed. You can buy, but within India, if a machinery was used in India, you cannot use that machinery. Now the question came that if I buy only one old machinery, then also I will not be eligible for exemption. Suppose I put in place the whole factory, everything. I just bought a second-hand generator or a second-hand machine. So just for buying that small machine, I will not be eligible. So the government said that up to 20% you can buy old machinery. So that is allowed, but most of your machinery should be the new one. And then in this 15% tax regime, you cannot claim any other exemption. But again, interestingly, Section 80JJAA deduction is available to this business as well. So first of all, you will claim that 15% tax rate. Second, obviously, if you are establishing a new factory, you will be employing people, lot of workers, supervisors, etc. So for that, you will again claim 80JJAA deduction, and MAT is not applicable on you. So effectively, you may reach to a zero taxation as well for at least 3 years. So obviously, if somebody reaches 3 years at least zero taxation, and thereafter 15% tax rate, that's a very good scenario. So only one important catch is there for any of these provisions. If you exercise the option once, you cannot withdraw that option. There is no exit. So it is very important that the entrepreneurs get involved in this decision. They also tell the consultants what is their plan. So tax consultants are not just can work in isolation. They have to partner with the entrepreneurs, understand what is their plan, and accordingly the tax rate has to be chosen. So that is one important provision, which is a very good benefit. Most of the companies should try to utilize. In this case, one more important point is that suppose you are already doing a business and you want to establish a new factory. So instead of establishing new factory in the same company, you would want to establish this new factory into a new company and claim this, say, 15% tax regime. Now the situation comes that your new factory is also selling goods to your old business or to the clients of your old business. Now you would try to create a scenario where more and more profit comes to this business, which is at a lower tax regime. So in case there are transactions with your old business, with the other entity, in a manner that you are creating more profits into this business, which is taxed at a lesser rate, then domestic transfer pricing might apply. So basically, the law has adequate controls to ensure that nobody misuses the provisions by making the transactions in a way that they are unnecessarily creating a higher income into this kind of a business. or you create some income which is not related to the manufacturing into this business, so those incomes will be taxed at the highest rate. So those are few safeguards available, and that one should keep in mind. But otherwise, this is a very good beneficial provision. 80JJAA as well as this lower tax regime, 15% for new manufacturing company. And I would request all the entrepreneurs to take the maximum benefit out of it if their situation falls in any of these areas. So this is all important provisions that I planned for the discussion today. Over to you, Sandeep ji.
Right. Great. With Prem and Rajiv, we got very important points, starting from a startup benefit to benefit if you're employing people below 25,000 rupees a salary, tax benefits to push on employment generation, to exemptions, to even choosing the right regime. And believe me, we have been working hands together with tax consultants and advisors in restructuring companies and realigning them. The most important thing is how to plan. And as both Rajiv and Prem have been pointing out to entrepreneurs, you need to plan. If you plan properly, you can plan your taxes appropriately. And this is very important. So I request Mr. Prem to share with us as an entrepreneur, if I need to structure my tax planning, how should I go about? What would be your advice?
Yeah, thank you, Sunilji. So I'll take few points from what Mr. Rajiv just mentioned. That's this common scenario in today's world that people are generally not aware of the exemptions, benefit schemes that are presently which have been offered by the government. So one has to create a scenario, an environment in the business that by default it gets updates of what are the beneficial provisions of law that are available in the system. So for this, you have to first ensure that you hire correct kind of persons in your taxation department in-house. You create some kind of control charts which are available on your dashboard. That there are things which you have to follow for the compliance also, for the benefits also, for the payment of taxes also. So that you are not left behind on any kind of compliances. And as we discussed earlier, the cost of non-compliance is much more than the cost of compliance today. So you take the services of the subject matter expert. Don't try to be expert yourself. You rely on the subject matter experts and take opinion wherever you think that can be beneficial to you. You take opinion of the experts, and then definitely you will be rightly placed in the business so far as tax planning is concerned. So this is what I have to say.
Thank you, Prem. So what you are suggesting is there should be proper planning and there should be competent people to advise you.
Yeah.
And believe us, it helps increasing companies' valuation over and over again, year and year after. And it helps not only generating revenues, but helps an organization grow, collaborate, seek partnerships, expand, and do much more in the coming years for your business growth. Rajiv, coming up onto you, a very important question which keeps on coming up. What did you say is the government's approach towards taxation and companies at present in the current scenario?
I guess government is today, they are trying first of all to plug all the loopholes. They are trying to strengthen the system. As you can see today, all the usage of technology has increased a lot. So making mistakes and getting away with that is becoming more and more difficult. The government is having a more stricter control by way of usage technology and systems, centralized processing of returns, and with all of logics that they are putting in place. So first of all, with this excessive use of technology, they are making evasion a lot difficult these days. They intend to reduce the evasion, and with that reduced evasion, they intend to have a higher tax compliance so that they can offer a low tax rates. So there has been a continuous decline rates. At the same time, a stricter implementation of the law in a manner that ultimately, even with the lower tax rate, the government collections are still higher. Plus, at the same time, government trying to minimize the disputes by minimizing the exemptions and offering a lower tax rate, so that a message goes to the world that India is not a high tax rate country. But unfortunately, with this situation in place, we have multiple tax regimes in front of us, and that has created a more complexity for the entrepreneurs, and they are able to plan the
Understand and plan it.
by themselves. They need professionals more than before. Even the individuals are finding difficult this year. Out of the different tax regime, they also have this scenario where they choose no exemption but lower tax rate, or exemption but a lesser higher tax rate. So they are also trying to compare and take help. They need to take help from professionals to make a comparison. So a lot of changes are happening. Earlier, the changes were less frequent. Now changes are very frequent. Lot of changes, updations are happening very frequently. New requirements are coming. So we are looking at a very dynamic times.
Wonderful. So as I get you, what you are saying is the government is looking at generating a lot of opportunities to have a positive image of the country to the entire world, which is there, trying to ensure that people follow, and also there are practices which can help businesses to plan and move forward. At this juncture, Mr. Goyal, you have been an entrepreneur. Okay, so how do you see it, and how do would you suggest and advise people when they are addressing a subject like taxation? What is your experience been?
You see, there has been like in my last 27 years of business life, I've been seeing the government, all the governments are fighting to bring in more and more people in the loop. But it has been I must say that it is a more like a hit and trial methods have been adopted. Now, if you look at taxation of some other countries where the taxation at spending is much lesser, so people are being robbed in and entire transactions have been recorded. So there is no evasion. Now here, let's say if probably I'll say that the GST is mostly 18%. Now, if you are talking about 30% taxation, income tax as well, so in a way, person is paying around 48% of tax.
Absolutely.
It becomes substantially higher. So there has to be like maybe we can talk an example of an amusement park. I remember maybe 25 years or 30 years back, the amusement parks used to charge the tickets for each and every ride, and there used to be a lot of rush on each and every counter. Now today, if you go to any organized theme park, you have an entry ticket, and they put a band on it. You have a fast ticket, you have a normal ticket, or you have a VIP ticket, and post to that there is no payment. So the person feels free wherever he goes. He has paid in advance and he's free. So taxation has to be in such a way where the taxation is not like taken as while creating the webinar message. I said the tax is you don't pay the tax; it is taken. So if the government works on reversing this trend, where it is paid, not taken, probably the entire problem
I can you out, Mr. Goyal.
will be resolved, I think.
Right, right. Great. Has been a very exciting thing, and I think it's a great opportunity to share our thoughts. And basically, tax planning is very, very important for every entrepreneur. And we have seen time and again when we have been working with organizations, whether it comes to collaborations, growth, funding, structures, we had to unfortunately spend a lot of time in getting the financial structure right. I'm sure uh, Mr. Prem and Rajiv will agree with that. And as a company has to be brought to a particular level, so it's very, very important that every entrepreneur from the day one has a vision, has a plan, shares it with their tax consultants, experts, and gets a appropriate advice in terms of how to structure it out, which will benefit you in terms of taxation and other areas. Mr. Goyal, you wanted to point out something, if I'm right.
There is a query from Mr. Lovely. Is there a source where tax rules are available for easy read? He's a new entrepreneur. So,
Rajiv?
Actually, if you want an authentic source to read the tax rules, that is the official website of Income Tax Department, which is incometaxindia.gov.in. That's a free resource and authentic one. But the only issue is that many a times an entrepreneur would not feel comfortable reading the law as it is. They would need some easy material which can explain in a more common sense. So the law is very complicated sometimes. Sometimes it is easy to understand. Sometimes it is little complicated. But I only recommend the authentic source because it is full of all that information, which might not be the updated or authentic one.
So, on the Indian government site, they can go and have a look at it, right? It's available over there.
Yes, yes. The updated act and rule, everything is available there.
Okay.
Incometaxindia.gov.in.
Right. Thank you, Rajiv. Thank you. Anybody has any other queries? I think there's no more queries.
Sandeep, before we
Yes,
further, I would like to raise a query to Prem as well as to Rajiv ji.
Rajiv, please.
As an entrepreneur, people are not very much trained on these aspects, and no one starts their business to manage taxes. So that comes down to maybe the second or third category, because generally businesses don't do profit in the early stage, and by the time they come to that level, their own these initial benefits are already been gone. Now, is there a way in the practice? I'm saying, I mean, it's more towards the practices and the profession part, where the professionals they themselves come up with the, like after reading the balance sheets or the business or the client business actually. I mean, is there any practice or system or mechanism where they probably suggest themselves rather than being questioned by the entrepreneur and then the solution comes? Over to you both.
Yes. Prem, would you like to answer or should I take it up?
I could not get the entire question in properly.
Okay, okay. I'll take up this question. So, sir, I understood your question, and it is actually a very peculiar situation for startup companies or small companies. Initially, they are not able to give attention to these things the way they should be giving attention to all those compliances, and they lose a lot of benefits. And by them creating the capabilities on themselves is very difficult because it is an area of subject matter experts. Like if I have to make my own website, it will be difficult for me because I'm not a person who can make a website. So I would go to somebody who make a website for me, or I will go to someone who can do certain things for me. Have to maintain my laptops and of my office. So I go to an IT expert who maintains the offices for the laptops for me. They have to approach the tax consultants at appropriate level, and it is if they do not approach because they are at the initial level, they might it might become very costly. I just give you an example. For example, a business has started in the first year, it made a loss of 50 lakh rupees. So they said that there is no loss, no profit, why taxes, why to file nothing. They did not file their income tax return, for example, or they filed an incorrect income tax return. And next year again, they had the losses of like say 50, 60 lakhs. They are disappointed and they are not doing their tax compliances. On third year, which usually happens that after first 2 years of losses, the third year, fourth year, they start earning profits. On third year, they made a profit of let's say 60 lakh rupees. They would say that we have already suffered so much of losses. Why should we pay taxes? Now they are coming for the first time to the tax consultant. So since all those previous returns are not filed or late filed, they do not get the credit of the taxes, the losses that they have incurred for the previous years, and they have to pay taxes now because it can't be claimed. So a time which is lost is a time which is cannot be taken back. Of course, professionals can be more reasonable, can be more supportive in the initial times, and we try to be more economical and more visible for the businesses. But there is the tax laws are not that simple. Multiple options are there, multiple regimes are there, multiple exemptions are there. So once a business you give birth to a business, you have to manage all the operations, and taxation or finance is also a very important operation that you have to keep managing. You not only focus on the sales and
Rajiv, I'm sorry to interrupt you. I raise
yes,
a question. Let's say I am a new entrepreneur and setting up a manufacturing facility somewhere. I come to you. Will you be giving me any checklist that these are the benefits available to you, or these are the things you must take care, or these are the things probably you'll be facing in next 2-3 years down the line?
yes, sir. As a professional, I will try to educate that entrepreneur. If you are coming to me, what could be the benefits to you, and I will try to understand what is your plan and what all, because I cannot get you to all the provisions of income tax, but I will try to filter out what could be relevant to you, and I will try to highlight those points to you so that at least you know that some benefits are there, and whenever some situation of that sort happens, you will definitely try to get advantage of that. So that
Is this a practice, normal practice, or it is only when it is asked?
No, we are
sir,
there to support the businesses on all the matters for which you come. If you hand over the entire thing to a professional, then he'll do best what is available in the law under your confidence. So if you approach somebody asking for whatever benefits are available in the law, or what are the checklists which are required to be complied with, we are definitely there to support, and we'll do the needful.
A checklist can be provided. That is what Rajiv and Prem is saying.
Definitely.
Yeah, there is another query, I think from the Loveline only. Is there any special relaxation for women social entrepreneurs?
Any relaxation for women entrepreneurs?
Yeah, social entrepreneurs.
Women and
by social entrepreneur, what she wants to mention, it's not clear. But most of the tax rates and tax laws nowadays are same for women and men, and most of the times the entity in which the business is done is neither a woman or a man. It's an entity, artificial entity, that is a company or a LLP. But of course, there are various government schemes in which the women entrepreneurs gets some benefits, like concessional funding, or some stand-up India scheme is there, or some other schemes are there which she can take advantage of. And in case the business is eligible for startup schemes or some other schemes that she can take advantage.
Right.
I would like to take it further.
Who is in case
Also social enterprise.
Yeah, Prem, you were saying something.
Yeah,
Yes.
she has also mentioned about social.
Social.
So we take it as non-profit organization. So there's definitely some provision in the law by way of section 12A and ATG. 12A makes that organization tax-free subject to certain conditions. So definitely there are some exemptions for social enterprises. But as Mr. Rajiv rightly said, there is no gender-specific exemptions available presently. It used to be there way back in the law that women had some tax benefits additional to what men were getting. Today is not like that. But social enterprises have separate tax relaxations under section 12A.
In case there is further query, you can write to us with your specific requirements, and we'll be more than happy to help you out. I think that is it. In fact, Mr. Goel, the message is for every entrepreneur we have seen, avoid self-medication. Don't go for self-medication. At least share your plans, your thoughts, and business is very, very dear to everybody. Whatever is your big plan, put it down, and there are people with adequate expertise who can understand, decipher, and explain it for every entrepreneur, which will make it more meaningful, and it will be a lot of help to an entrepreneur where he or she can focus on not taxation but chasing their and making the business happen, while the concerned expert can guide that entrepreneur in the right direction. With that, I would like to conclude today's session. Thank you, Prem. Thank you, Ranjit.
Thank
Thank
you,
you
sir.
for joining.
Thank you, Raviji.
And thanks everybody been part of this webinar today. See you again next week.
Thank you.
Thank you, Premji. Thank you.
Thank you.
Thank you, sir.
Bye bye.
The participants who joined. Thank you very much.